to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, utilizing money correctly, and how this will help you grow your business and your wealth. All right, folks, thanks for being here. I just want to talk to you today about a question that I got from a client. Hey, Mary Jo, can I borrow money to start another policy? Or can I borrow cash value? I should say was his specific question. Can I borrow cash value from one policy to start another policy? Well, I am going to tell you, technically, sure, you can borrow money from a policy to do whatever it is that you like, because nobody cares what you do. If you are my client and you think that's a good idea, I'm going to tell you no. Because why are we robbing Peter to pay Paul? It is not about the amount of policies you have, right? I mean, I don't care if you have one policy or if you have 30 policies. You don't get wealthy having more policies. You make money by paying premium. You don't make money borrowing money to buy another policy. Like, it just doesn't work that way long term. And there is this misconception, and there are slimy agents out there that are telling you that this is a good idea. And I am here to tell you, no, thank you. I am going to give up this commission. And why do that? Like, it just doesn't make sense to me. So think about it. If you borrow cash value, and let's say that you're going to have a $10,000 premium, okay? So you borrow $10,000 of cash value from policy A to fund policy B. Now you started your second policy. You've got policy B going. Now you have to pay premium on policy A. You have to pay a loan back on policy A. And how are you going to pay premium on the second policy the second year? So you put $10,000 in year one because you borrowed it. Where is the money coming from for year two's policy? Maybe there are agents out there that can explain to me why this would be a good idea. However, I'm not seeing it. I have ran the numbers of letting loans go without paying them, and it just doesn't work. You need to pay a loan or the interest. You need to pay that. If you let the interest and the principal of that loan go for too long, it will eat up the policy. So if we're going to rob Peter to pay Paul, eventually Peter is going to say, you know what, I'm taking your stuff. Your policy is going to lapse because you haven't been paying it. It is not about the quantity of policies that we have. Again, that technique is for agents who just want to make some commission. For agents that are saying, well, Nelson had 49 life insurance policies, so you should have 49 life insurance policies tomorrow. No. If you remember, if you've read Nelson's book and you remember what he says in the very last chapter or the last 2 pages of his book, he says this should take you a lifetime to build this system. It shouldn't take you 5 years. It should take you a lifetime. He had policies from when he was young, but he really didn't quite grasp the infinite banking concept until he was in his late 40s, early 50s. The majority of us are figuring this out much before Nelson did at Nelson's age. Now, I don't quite get either. If we want to start a policy by borrowing money, are we anticipating that we're going to have money year 2? Is that certain we're going to have money year 2 to pay the premium? Because if it's not certain, we're just basing everything on assumptions. So what happens if we don't have the money? Then that policy lapses as well. Because if you don't pay premium, you don't have a policy. It goes away. They'll send you a check for whatever the cash value is. In some cases, that whole life policy will turn into a term policy. Now you don't even have a whole life policy anymore. So we have to look at the big picture. And I swear, I have been preaching thinking long term in every podcast episode I do between here and the Farming Without the Bank podcast. That's all I'm talking about is think long term. So many of us are short-term thinkers and we want this get rich quick thing, and it just doesn't make sense. Now, can you start another policy before a loan is paid off on the existing policy? Yes, you can. Are you paying the loan off on the existing policy? People ask me that all the time. Well, can I start another policy? I still have a loan on my existing policy. Yeah, are you making payments on that loan? If you're making payments because maybe it's for a business loan or it's for a land loan or it's for a vehicle loan, whatever, if you're making payments, great, let's start another policy. But if you're not making payments on the existing policy loan, why? It's not free money. No, you should not be starting another policy if you can't make payments on the existing loan of the existing policy. This is so easy for people to make this look really, really good. And for some agents to be able to sell this and really try to make a lot of commission or misunderstand it themselves, because the majority of the agents out there saying, well, I'm going to borrow money to start another policy. Those agents are not infinite banking certified, right? They're agents that have read Nelson's book and all they see is a way to sell life insurance, which again is covered in Nelson's book. That's not what his book is for. I have never done this. I cannot say that I have ever borrowed money to start a policy. Now, I've done just about everything you can do with a policy and that you can do wrong. I've done that. But I have not done the borrowing, robbing Peter to pay Paul. Now, I know other agents that have, and they will also tell you that they did all of these things wrong and they do not advise that because it was not right. And maybe it all worked out in the end and they could continue to afford their premium payment. Let's not get hung up on the number of policies or the fact that we can afford year one's premium. I will maybe even have somebody come to me that says, well, Mary Jo, I just inherited, $300,000 and I want to start a policy. Great. We can get that in over maybe 5 to 7 years, but how are you going to pay the premium come year 6 to 8? Because we do have premium that has to be paid and continue to be paid. If you think, well, I just want to put that in and then stop, and you're young, well, why? Why do you want to stop feeding something that continues to grow? It is a complete misunderstanding of what we are trying to do with the infinite banking concept. Because you might have some agent helping you that doesn't have a clue themselves. So as you're reading, as you're educating yourself, remember long-term thinking, and this is not some get-rich-quick thing. We continually have to be honest bankers. And if we're not honest, it's going to bite us in the butt eventually. Nobody wants a bite on their butt, right? Do it right. Learn from those that went before you and learn from somebody that is an infinite banking practitioner. Because majority of us have done it wrong, or we know somebody that's done it wrong. When you borrow money from a policy, the insurance company holds the interest in advance. And a lot of people don't understand this. So the insurance company will hold the interest in advance. So if you don't pay your interest next year, they want it when they send you your renewal statement, they're going to say, hey, your life insurance policy is $10,000 and your interest is $200, for example. We want $10,200. We want you to pay the interest for the coming year. If you do not, when you pay your premium, your cash value is going to go up by $200 less because they're going to grab it from cash value and hold it in advance. Well, eventually, your interest if you don't ever pay the loan back, eventually you pay premium and your cash value doesn't even go up because your interest is so expensive. It's eating up any extra money that your cash value would have grown by, if that makes sense. It's hard to explain when I'm like visualizing it in my head because I'm very visual. And so when I do this on a spreadsheet, I can see we don't have but 9, 10, 11 years before that policy collapses on itself. And I had a client that did exactly that. He continued to take loans every single year, and he never paid the loan or the interest. Well, we get to year 9 or 10 of the policy, and it lapses on him. He was a terrible banker. He was not honest with his money. So if we're going to borrow cash value to start another policy, we can't just leave that loan out there and think that, oh, we're going to make more interest than what the insurance company is charging us on the loan. And that is a misconception. Oh, you don't need to pay that loan back because you're earning interest at a higher rate than what you're paying. How you earn interest is long term. So what you're paying today could very well be more than what you're earning today if you're in the early years of your policy. Horrible strategy, my friends. Horrible. As you can tell, I don't agree. Now, this could lead me onto many other tangents, but I want to keep this very specific to this topic because this can get you into trouble. And I don't want to get too sidetracked. And I'll leave that for other podcasts. I don't want to get too sidetracked on other things that I could be bringing in here. So I'm going to keep this one short today. I mean, we're short. This isn't going to be a very long podcast because I'm not going to get on a tangent. I know, surprise. I'm going to stay on track today and not be a squirrel. So I hope that helped. If you've had that question and said, well, I need to have a lot of policies. Do you need to? I don't think you do. I don't agree with it. If you have the money for them, great. If you don't have the money for them, no, you wait to start them. Simple. It's that simple. Okay, if you guys have questions, comments, concerns, a podcast topic that you want to hear, email me at maryjo@withoutthebank.com. I am loving reading all of your emails and hearing from you guys, so please do not be shy. I do read those. I do answer those. So if you need something, please let us know. If you have not gotten the book Life Without the Bank and you've not gotten Nelson's book Becoming Your Own Banker, I just ask why. What you waiting for? Go ahead, go to withoutthebank.com, grab those, read those, schedule your appointment with me so that we can help you get started. But if you need anything else in the meantime, Mary Jo at withoutthebank.com. And until next week, you have a fantastic rest of your week.